Broadcast. Welcome to the Zaner MarketCast episode number 43. Your one and only spot to keep up with all of the agricultural market news. My name is Joe, and I'm here with
Dan Hussey, everybody.
Dan in the house. A little bit of a sporting contest coming up on Sunday.
I'm sorry. That's some bowl game, right?
The big
some national
game.
Championship.
The big game.
That's right. We don't have exclusive rights. I think we have to call it legally the big game.
The heavy betting. What do we bet that Taylor Swift takes the stage? Yes, or Taylor Swift takes the stage? No.
I think the bet might be does Kelsey get down on one knee? Right? Is that the big guess? I heard. Who did I hear was performing though? Is the official?
Not Drake.
Not Drake. Okay.
Yeah, not Drake. We're sure about that.
Shows you our commitment to the big game.
Yeah. It's Kendrick. I think Kendrick Lamar.
Kendrick Lamar. I think you're right.
Yeah, I don't know too much about that. I just know that he is not Drake, and that's bad for Drake. Before we get started, we want to let you know that if you're interested in hearing about grain market price action daily and strategies that you might be able to use for your marketing and risk management, you can sign up for our Zaner Ag Hedge Hotline hosted by expert market strategist Ted Seifert. Totally free. Gives you the chance to connect with us personally. If you're interested in learning more about how that price action works and how to make that price action work for you, it's a perfect way to take that first step. Link is in the description below to sign up for that. Totally free, zero commitment. I think I'm back in the game here, Dan. Kind of a big, kind of a long week, kind of a big week in the span of 5 market days. Seems like we've been around the block and then some.
Yeah, really has. I mean, great finish to the week for wheat. We'll get into in a minute. Beans have a big range they could play in that we'll talk more about too. And, corn, I think the big question is, are we coming off this heater of a rally? What does it mean for the future? But what an impressive week. I mean, really headline driven too, right? Every time the T word is mentioned, tariffs, we seem to be jittery up and down. And it doesn't matter if it's row crops, equity indices, crude oil, everything is hanging on a thread based off of what some of these politicians have to say.
Yes, tariffs, no tariffs, yes, tariffs, no tariffs, 30-day delay, no delay. But we got the delay. We seem to be on the right path with the Canadians and with the Mexicans. Behind the scenes with China, certainly quiet so far, but some interesting, subtle moves on both sides, especially by the Chinese. Chinese come back with what many considered an olive branch in terms of, here are some potential tariffs. But rather mild response to the opening salvo here with the U.S. and the Chinese negotiating this trade situation lent a lot of enthusiasm to this week's market in terms of if we could iron something out with the Chinese, if we can bring them back to a trade deal type 2.0 type situation where they're going to commit to making purchases. Seems like maybe they could be in for more beans and even potentially be in for corn, which the market certainly finds very, very interesting, I think.
Yeah, and there was, like you said, that kind of opening salvo was also followed by a statement that maybe, hey, returning to that trade deal 1.0 as a starting point, really good to hear, right? It means, Trump has a tendency to do a shock and awe kind of marketing media campaign that then gets a conversation started, but then it gets people talking and then level heads prevail, or at least they have been so far. People come to the table and deals seem to be being made. So I'm cautiously optimistic and pretty optimistic, actually. Not even cautiously. I'm optimistic that deals will get done, and the volatility we're seeing as of late surrounding these news events will start to become a thing of the past.
Open with some stories, you think?
Sure. Yeah, we got lots to talk about on the chart. So
this week,
them out of the way.
U.S., Canada, Mexico won't impose immediate tariffs day after calls Chris Clayton from DTN. After pressing on Saturday to put 25% tariffs in place, President Donald Trump came to terms with Canadian Prime Minister Justin Trudeau on Monday afternoon after reaching a deal with Mexican President Claudia Sheinbaum earlier in the day. All three leaders agreed they would pause tariffs for 1 month. However, there still is no resolution with China, which faced a 10% increase in tariffs on Tuesday. Mexico agreed to add 10,000 Mexican National Guard troops to its northern border. Canada already implementing a $1.3 billion border security plan that Trudeau and Trump highlighted. Canada will also appoint a fentanyl czar, invest $200 million more to deal with organized crime and fentanyl, and add Mexican cartels to Canada's terrorist watch list. That should terrify the Mexican cartels. Trump posted on social media that talks about economic issues over the next month will determine if tariffs eventually go into effect. That's the key right there, huh? Trump posted on social media that talks about economic issues over the next month will determine if tariffs eventually go into effect. Mexico is the largest U.S. market for agricultural products right now, with nearly $30 billion expected in total in 2024. Maybe they mean 2025, but either way, Mexico, big time destination for U.S. products along with Canada and China. Mexico is the top market for U.S. corn, pork, poultry, dairy, wheat. Meanwhile, Canada on Sunday had posted a list of U.S. products that would have been subject to tariffs as early as Tuesday. Canadian list included a range of ag products, including poultry, pork, dairy, wheat, barley, rye, oats, rice, sunflowers, canola, sugar products, chocolates, pasta, fruits, vegetables, pasta again, soups, wine, beer, distilled liquors, tobacco, and wood products. Also included were animal feed supplements and harvesting equipment. The list did not include beef, which is an $824 million market. Also not on the list were corn or beans, but the U.S. exports only small volumes of those commodities to Canada. Ethanol also was not listed. So,
very choice selections there, but smart moves, right? And I almost find it ironic that like sunflowers, canola are on that list, because I'm pretty sure we import those from Canada and not the other way around.
Right?
But what can you do?
Smart of them not to mess around with the meat. You know what I mean?
Absolutely.
You can fiddle around with 100%. All the pasta you want, but I think them Canadians still want some American steaks, right?
You can't beat an American steak. You really can't.
I don't think you can. Cannot.
USDA freezes conservation funds, other programs leaving some farmers in financial limbo. The USDA is withholding funds from farmers for conservation programs, despite the White House stating last week that funds to individuals would not be frozen. Contractors for conservation programs have also been affected by funding freezes. The Iowa Soybean Association, for instance, cited a letter to lawmakers that $11 million owed to farmers is at risk. It seems like a small amount of money in the big grand scheme of things, but those dollars and cents can matter. Farmers are learning that their conservation payments are frozen because those contracts are funded through the Inflation Reduction Act, the IRA. Comments were sought from the USDA over which programs are frozen and question why payments to the individual farmers were frozen. The USDA's press office did not respond for comment. Officials with the Natural Resources Conservation Services, NRCS, also did not respond. And I would give them both those parties the benefit of the doubt that they simply don't know what the answer is at this time. The Trump administration put a freeze on all federal spending related to the IRA, that Inflation Reduction Act. Other reports have cited that renewable energy grants at the EPA and Department of Energy have been halted to communities around the country. There are reports of federal agencies now trying to claw back IRA dollars and contracts as well, which that part becomes a little difficult for the end producer and consumers, but we will see. Seems like a lot of those initiatives, mostly climate-based and carbon focused, are getting the axe into this new administration, and we'll see if that continues to be a trend.
Yeah.
Doge is having an effect.
How about some weekly numbers? March corn. Opened the week 476 3/4. The high was 498 1/2. The low was 472 1/4. Last trade I saw was 487 1/2. That's up just 5 1/2 on the week. Funds long 381,000 contracts estimated, maybe 377. We'll see what the CFTC, if there still is a CFTC today, to give us a report. We'll see what they have to say. Marking time, China holiday, pre-WASD, hugging the 10 and 18 day. How about Karen Braun post this afternoon from Reuters? Karen Braun, great dart player, I understand.
I was going to say, she was a killer at the dartboard this last week.
Mato Grosso, 78% of that Safrinha corn crop comes from Mato Grosso in Brazil. 23% this week completed planting, up from 6% the previous week, still 10% off from the 5-year average, 33% though. But that changes.
That 6% gain is a pretty steep gain though, if you look at those
from
curves.
6 to 23.
Yep, that's a big, so they're really, really running those planters, getting that in, because they were behind. And I think, if the weather, from what I saw, can kind of hold out here, they're going to probably catch up pretty good.
That changes my narrative just a bit. Okay, so I'm talking this Safrinha corn crop is going to be delayed right into the teeth of your April dryness. You're going to be, that is not the time that you want corn to be experiencing dryness. And so that may change this a little bit. We'll see.
Mm-hmm.
We'll see. Maybe that is one of the reasons, maybe that fact, as posted by Karen from Reuters, is what has got this corn market up only 5.5 on the week, where we really had, for the week, we were knocking on the door of $5 yet again. Dan, I wonder, and I've been meaning to ask you this question all week. So in March beans, 498.5, we really have not gotten out over $5. But if you flip the script to May doesn't really have a $5, right? You don't have all the open interest and all the volume in May yet, but a lot of it has shifted. And if you look at the open interest increase versus the open interest decrease in March, you can almost make an argument that your most active contract is May. Even though you don't necessarily see it in the open interest and the volume, right? May is the front month contract.
And it's going to continue to shift, right? From now until the
May
next
doesn't
month.
May doesn't have that $5, that $5 line in the sand. Do we continue to watch March and continue to say, you've got to get over $5, or do you just look at May and say, not such a big deal what happens in March?
So it may not be that $5 level. I would call people's to attention that also kind of coincides with where we were this time last year. Well, May into June, that like end of planting high we were in corn last year. You go back to May 15th when we topped out on the corn contract the last time. That high was 507 in the March contract, and in the May it was 513. So we got within 4 cents of that pre-summer, springtime pre-plant or planting season high before ultimately, we had the negative effects of good weather where the market agreed that the corn prices need to come lower. And so I'd say we're right. It's not that straight $5 psychological level, but there's certainly, when we look back, there is that level on the chart from last year into the springtime. This was as far as corn was able to run at that point in time. It's a lot earlier right now, right? I mean, this is February. We haven't even begun to talk acreage yet. And in, our next WASDE report, we'll start to have those considerations, but you're right. $5 corn has been something that's been actually supported in May and July contracts over this last week, where we're fighting to get through it on that March.
And so can't really leave corn without talking about this 381,000 contract position by the funds, nearly 400,000 contracts, rather large, biggest position they've had, I think they said, since 2022. Not the record yet. Their record's in the 5s, but we're getting up there. I noticed that the trade, that the commentators are looking at this large position saying, oh man, if they decide to come out, the other way that I wonder about looking at that is that this 381,000 represents severe or significant commitment or conviction about this corn position. And with the funds, this is not a hedge. These funds are alpha chasing. They're not hedging a position. These funds are making a very big, very committed bet to higher prices. What do you think about that?
Yeah, you cut out a little bit there, but I get the gist of what you were saying. The fund position is big. If they want to get out of their position, we're not going to be running up any further, right? They're going to be the reason that this market tops out. What
my point is, and maybe I fell out there. What my point is that this 380,000, near 400,000 contract position represents significant commitment or conviction about the possibility of higher prices. Funds don't put up a position of this size without having this.
Without a reason.
They are positioning for higher prices.
Correct. Right. I mean, that's the only, they are only beholden to their investors, to making profit and to turning a speculative position into a winner. Otherwise, right, there is no other reason for them to be long corn.
What do they know?
They've, I guess the more we've looked at South American production, that setback and the slow Safrinha planting, they may know something about ethanol that we don't right now, and there's definitely a response, I think, to the USDA having kind of sandbagged us with those carryout numbers. There's less corn and beans out there than what the trade originally anticipated, and ever since that last WASDE report where we got that course correction on that balance sheet, this market has been up. And I think that's not only the shorts, anyone who's betting on the market going down, kind of getting out of the way and saying, hey, we might have had it wrong, but it's also guys coming in and saying, hey, well, if it's way tighter than what we thought it was going to be, until there's more seed in the ground, this should be a demand-driven market.
And demand has been pretty stout. Those ethanol numbers were great. Export numbers were great. We're chugging right along. If there is not a change in demand, or if we don't magically find some corn somewhere, this is just going to keep getting tighter and tighter between now and the time that more corn becomes available from this Safrinha crop, right?
Yeah, absolutely. Yeah, the longer that time that goes on, if they can get it in the ground, all we've got is another crop coming out of the ground and out of South America.
March beans opened the week at 10.32. High was 10.79 3/4. Low 10.31 3/4. Last trade 10.49 1/2. Up 7 1/2. Another meh close for the week, but still up 7 1/2. Funds now long 73,000 contracts in May in what I had felt was the potential for a rather heavy market. In my notes here, I say, why do beans feel so heavy? I feel like we need a close over that 200-day moving average again, 1069 then, and that won't even be enough for me. 1080 feels like we have to close over 1080 for this to really be good. And I remember saying some time ago that as long as we're closing over 10, well, it'll be good. You want to re-own it? Make sure it's closing over 10, then you can re-own it. Now I'm saying make sure it's over 1069, also 1080. What will I be saying soon? Make sure it closes over 11. Make sure it closes over 1150. I can't remember who I saw on TV today, but somebody was saying, "Oh, these beans are going to 12 or 13 bucks," and not that that's right or wrong, right? My point is that now you see commentators where before we firmly believed, or the trade really felt, where were beans going? $9, $8.50. Now you're on the other side of the coin where some people feel there's kind of a two-sided market here. But to me, beans still feel heavy. Why is that?
That 200-day moving average, we can't clamber over it. I guess for the best, the better part of the last month, we've been banging up on resistance and just can't rip out, right? We watched a parabolic corn move that beans, we're hit $1.50 off of, or $1 off of their contract low, but they have started to feel like they've lost steam. I know what you mean. Plus, we definitely have some really big, the perspective of really big crops out of South America that have, I think put a hamper on things. Plus, I think we all know that, there's turbulence in terms of trade with foreign countries, and the soybean crop doesn't, wouldn't be in the ground if it weren't for our exports. Right. So there's a lot of those reasons to still be concerned and play devil's advocate, even though, it's still an uptrend. There hasn't been a great reason to be a strong seller in beans, like you said. And once we got above $10, there's concerns for hedging purposes, and the trend was still down. But once we established ourselves above that level, it's been an uptrend. And unfortunately, in the very near term, I mean, since basically January 15th, we've had to watch the market sit through two two 40-cent pullbacks, and after today, a solid, 30-some cent pullback. So those are not, those are not small moves to just fall asleep at the wheel with either, right? There's clearly resistance, and the rallies have found sellers, even though the sell-offs have found buyers. Those are big ranges the market has been playing in, for the better part of the last month.
Speaking of which, March bean oil opened the week 47.01, high was 47.54, low 44.64. Last trade I saw was 45.98. Down just 13 ticks on the week. Bean oil long, 54,000 contracts. Funds have a long position there. Looks higher, right, on the chart. I look at this chart and I say, okay, looks higher, but one way or the other, when I start to see these diamond type formations, these diamond type consolidated formations, one way or another, whether we go lower or higher, we are not going to be here for long, right?
Yeah, we won't. And you hate to look at not to change the subject, the meal chart, which has been, stuck in a range, but all things in commodities,
the trend is up, right?
We're not going to be in these ranges for very long. That oil chart, though, is banging up on resistance with a small gap to fill above. It goes through there. We're getting back to the highs of the previous swing. And then what stops it, above there at that point, right? If you want to play the technical game with the oil, quite an impressive move and recovery on a chart that I think a lot of people were writing off here just a few weeks ago.
And you mentioned meal, and that, like when I looked at that chart, super noisy. But then I say, okay, tell me about the trend direction, which I'm being forced to do with the amount of noise and the amount of volatility that we're seeing. You really have to kind of check your head here and say, okay, what's the trend direction? And in meal, it's mildly higher, right? You open the week 298.60, high was 314.90, low 295.30, last trade 301.40. That's just up three ticks on the week. But you look at the trend is slightly higher, noisy chart, but funds are short 48,000 contracts. And so that's one of the few places here in this in this entire ag complex where you see a short position here in wheat. And I wonder, are the funds headed for this meal contract?
And when we talk about beans and bean rallies, we are often talking about how the meal is the demand leader, right? That's where the real demand is until we start getting into the true biofuel era for soybeans, which at some point in time, it's going to be a real game changer, right? But not yet. The real demand for the crush is in the meal. And so when we look at that meal chart and say it's consolidating, it's not going to stay here long. It could also predetermine, or not predetermine, but determine that soybean trend. And if we start to break this range higher, and like you said, Joe, you basically had a nice rally off of contract lows and now consolidation, that if that consolidation gives way to a move higher to like the 200-day moving average up to 322, that's going to be, in my opinion, one of those signals that takes the outright soybean prices up and past $11, and really, maybe that's the last hurrah into the springtime. But hey, it's almost like the energy is building in the soybean complex, and I think it's generated around that meal chart consolidation here. Something's going to go. It feels to me there's a firecracker ready to get lit.
And a lot of people talking about that, how maybe the feeling in beans has changed, and that your end user is on the bid, supporting breaks, and that, to me,
there's a clear trend line on the soybean chart since contract lows that we are basically holding, and that 18-day that 18-day is a parallel line with that contract. So it's like, somebody cares about this market being supported.
And then it's almost like you need something from left field to really change that tone, to change that narrative, is that something has changed in the bean market. You look at the carry out math, you look at, beans available in the world, and nothing there is alarming, right? That's the thing that I keep thinking. If you look at the math says, okay, there's ample beans, and there's a big giant wave of beans that's going to crash out into the ocean from Brazil any minute now, right? And so, but you still see the strength, and I think, well, what is really going to turn the tide here? Maybe it's this Brazilian bean crop. I don't know.
Yeah.
How about March wheat?
Yeah, no, and to your point, the Brazilian bean crop and the Brazilian corn crop, it's what matters now, right? Until we put the seed in the ground and we have that weather market in the United States, arguably a little bit of our acreage argument. That's the only unknown in the basket of row crops at this time.
Weather market for wheat. We opened the week at 555 in March. High was 592 and a half. Low 550 and a quarter. Closed the week at 582 and 3/4. Dan, that's up 23 and a quarter in a market where the funds are short 89,000 contracts. Technically, we're over every line in the sand but the 200 bar at 603 and a half. 18 days all the way down to 557 and a half. And you have to think that the fund trader is holding on to a short position that is a little long in the tooth, and that they should be kind of on the bid covering the short position if they're trading the way that we expect them to trade. Do you agree?
Absolutely. Absolutely. And starting a couple of weeks ago too, that wheat to corn ratio got as tight as 50 cents. I think it bottomed here at 52 at March wheat to March corn. It is up to 94 and 3/4 cents now. There's a 40-cent swing in that wheat to corn ratio.
Woo!
In an unwinding. We started selling off basically back in October from around the $2 mark. They shaved $1.50 off of that wheat to corn ratio down to 50 cents. I mean, it just got way too tight. And now we're seeing a reversal of that too. So I think you've got funds caught in an outright wheat short. They're also caught short wheat versus corn here. I find it very hard to be bearish the wheat right now into the springtime.
And weather is starting to turn, right? It's getting dry in some of the northern sections of the wheat growing area, and so you've got some real fundamentals here. Wheat always seems to find a way to trade lower, but
yeah, it does.
Is
right?
this time different? You hate to say it, but is this time different? Yeah, right.
No, I don't think it's different. I don't think it is different. There will be a time where wheat tops out, right? But we're caught in a short covering rally with good fundamentals and ultimately a chart that has upside pretty soon here, or is in a period of price discovery higher that's breaking above resistance. The KC March wheat has tested its 200-day moving average and kind of got it rejected around that 200-day. But I'm looking more towards those highs in October that are still about 30 cents above as to our next resistance area. There is nothing above that high in terms of levels on the chart again until $7. And I'm not saying we're going there, but go back and look at that April through June and into August of last year chart. We're up. We're almost banging against the levels where if they break through, why couldn't they just squeeze again like that?
That's what this wheat chart really feels like. They're having a hard time finding sellers.
Yes.
Right? Is that they're moving higher, expecting to find a willing seller, and when they get there, there's nobody home. And so
today we're still higher highs and higher lows, even though we were down 5 cents on the day in the Chicago, 3 in the KC. We were basically flat on the day on that spring wheat. I mean, it just looked like profit taking off of, in an uptrend at this point. And when they find the bid and find the support, the next round is probably going to be higher. And certainly I was looking back at some old charts of wheat. We are looking, I think, a lot like 2008. And boy, was there a run up in 2008 from similar levels to in the high sevens. I'm not saying we're going there yet. Let's get above $6 first, but I would not, be caught short wheat here if we're into a fund short covering rally.
89,000 contracts, right?
Right.
That's they got and they seem to be covered. There was a big number yesterday that they bought, and I can't remember what it was. It was 9,000 or 16,000,
something like that. But if that's worth a 20-cent move, do your math over the next 80,000 out, right?
You know it, and they're not messing around, right? When they come to cover that wheat contract, they just want to be out. So here's the big question of the week for me. I'm interested to see what you think about this. Feeder cattle for March, 274, 22 and a half open, high 276.65, low 264.07 and a half, close 264.90. Dan, that's down 10.82 and a half on the week. Feeders
the top is in.
Leading, right?
The top is in, folks. We're below that 18-day moving average from a couple days ago, right? Not only did we get through it, we held it for 3 days as resistance. Now we're getting down to the 50 and 55-day moving average to test this support. You're already dipping down to test that summertime high from last year, the old breakout high from December. You start to slip much lower on this chart, and there's no reason to think that the top isn't in for cattle.
And so the interesting thing about both feeders and fats is that it is populated by a participant group that numbers 3, right? It's us and producers, it's algorithm, and then the $300 tie set from New York, right? So you got your funds, you got your algorithm, and then you have your trade and your producers. And so when algorithm and the funds get moving in one direction, there really isn't anything to stop them, right? I mean, there's nobody here that steps in and says, well, I have to take a long position in front of this freight train. Everybody just kind of gets out of the way, and down we go. So to me, I wonder, what is the fundamental here? And we can do fats real quick too. Opened the week at 201.15. The high was 203.27.5. Low was 195.85. Closed at 196.77.5. That was down 5.5, down 552.5. 50-day comes in at 195 and change. Getting a little head and shouldery there. You know, if we get a little bit of a rally on the right shoulder and then fall down from there, who knows what that projects to? But my question to you is that I don't see where there is a, you know, unless you look at this fund position as its own fundamental, you know, so we're bringing some cattle in, we open the border, you got some cattle coming in from Mexico.
Which I think would be one of the fundamentals here to consider, right? There's only one way to get a fast amount of head, you know, into our market. Otherwise, it's going to take 200 to 300 day, right, to breed out, and we're just not doing that. You know, we haven't done that for a couple of years, right? We've only had shrinking herds, and that's a big reason we hit the levels we have, right? I mean, there's a reason that even in the face of maybe some price rationing of demand there in the beef sector, that cattle prices have just continued to rise. And I think we also saw a little bit, and from some of my talks with our cattlemen who are attending auction barns all over, there's been a little bit of irrational exuberance in the bids lately, particularly up north, you know, bidding up into the 215 to 220 range. I mean, those are some blow off type of top numbers that now, right, if cattle do make their way up from the south, by the way, lower crude prices, meaning cheaper rail potential to move cattle around the country, you're going to see all that get arbitraged out pretty quickly. And I mean, a big reason why supply hitting this market could bring things down. And I didn't mean to cut you off there. Were you maybe about to say something?
That's my question is, can we really bring, I wonder if we can really bring enough cattle across the borders, both Mexico and Canada, to fill in, you know, can we really fill in? And people ask questions about, do we really know how many cattle are out there? And my thought is that one way or the other, you know, they're using 1958 or 1950 something as the last time we've had a cattle herd that was this small. It would be very, very difficult to, in my opinion, to find animals from another place to get in here. And you just can't find a way to incentivize people to retain these heifers. They're giving them crazy money. You'd be nuts not to sell them. You know, I mean, I'm having a hard time finding out. But, you know, cattle doesn't, and that was my point earlier, you know, with the $300 tie set, is that cattle doesn't always respect the fundamentals the way that, you know, the cattle futures market, let me rephrase that, cattle futures market doesn't always respect the fundamentals the way that you would hope. And so you see what you see here, I think futures are discount to cash. And now we get to sit back and watch what's going to adjust. Will the futures come back to meet the cash, or will the cash rapidly decline to meet the futures? And so some question here as to whether or not, you know, I mean, it feels like cattle are heavy, but we'll see.
It does, right? And we know that once that fund position and the board price starts getting leaned into, algorithms take over. You know, I wouldn't say that there's much outside fear from the global economy right now, because things seem pretty optimistic. But, you know, price rationing of demand is a thing. And at some point, prices just get too high and a little too rich for folks. I know, hey, even at the supermarket, if you've gone and gone to buy some choice or any prime steaks, prices aren't cheap. You know, like, they're not giving away beef. I haven't seen even ground beef like on a hot sale in a while. It's not expensive, or certainly doesn't price me out of the market, but I was seeing some prices of ribeyes of like, oh, you're starting to like get up there, man. You know, if you're having a party, you may not choose to put that on the plate right now. And some of that consumer decision, you know, might be coming into play. I hate that kind of talk, because it's Americans, we love our red meat, and there's such a movement right into the red meat world now. Like, if anything, for years, they were so anti-red meat, but boy, hasn't there been a swing back in terms of the narrative for what's good for you and what you should have on your plate. So it's an interesting time. I feel like, consumers are coming back, but those aren't exactly what drive prices, because let's also not forget here, the size of cattle going across the scale have also been at records. So arguably you don't need as many head to produce as much meat as you have in the past. I know
Very
that's
good point.
not
No,
a
very
perfect
good point.
science, but these are
1,500 pounds is
some
1,500
big
pounds.
animals. Exactly. So, what does that do? Require maybe 10% less head? Okay. I mean, but that's still not, that's nothing compared to, right, in the grand scheme of things.
So the thing that I wonder, and had a conversation with a customer today saying, I think that I'm going to finally get some puts up. And you look at this and you say, okay, you can do this, even if you have to look all the way out into October, 186, 176 put spreads, not that bad. They were like 3.6, it was like $1,300 or something for that spread. You've got 10 full points worth of coverage, and you look at the October chart and you think, okay, the idea that we're going to go from 186 to 176, that's almost to the bottom, what I thought were contract lows, right? And so go ahead.
And that's a great starting point for, getting some actual production hedge going here, right? Like getting some kind of floor in place. And I was going to add to that, if you're not liking the idea of spending the premium on the puts right now, because puts are pretty inflated, right? They're a lot more expensive than they were a week ago. Doesn't mean they can't get the job done for you. This might also be the type of market where you actually come in and sell futures, but then turn around and buy a call to limit the future side risk and do what we refer to as a synthetic put. That way you may not feel like you're losing as much in the time value. But two great ways there to get an actual floor on and market price. Now that we're feeling more of a confirmation of a top is in place, you really should probably do something if this is unwinding. Synthetic put or a put spread right now are two ways that, even though we've come down quite a bit off of highs, you can still afford to get some protection on for probably the best bang for your buck.
And folks can hear us say that's not necessarily a recommendation for everybody. We don't know everyone's situation. We don't understand everybody's risk tolerance. But if we're happy to speak with you, if you want to take a moment and call us, or you want to take a moment and shoot an email in,
that's why we're here.
Leave a note. Yeah, leave a note. We'll be more than happy to speak with you about it and how something like that might fit in with your operation. Guys are talking about, I got to get some LRP. Maybe the LRP is a little expensive. I hear some commentators saying that maybe LRP doesn't get you all the way there, and adding some put coverage, even if you have LRP, adding some put coverage or some type of synthetic put might be the way to go, depending on what your situation is and what your tolerance for risk is.
Yeah, and that's the discussion that we can have with you and tailor a plan that makes sense for your balance sheet.
Dan, I think that brings us to the question of the week. Everybody's fired up about the question of the week. If you could be a contestant on any game show, which would it be?
That's a good one. I mean, I grew up religiously watching The Price is Right. And as much as I like Drew Carey, it would have to be the Bob Barker era of The Price is Right, though. But without a doubt, I would love to be in that studio, be called on down, hit a showcase. That would be the game show for me. The Price is Right for sure.
That was my answer too. So I couldn't.
I was between that and Jeopardy. But...
Remember when you would get sick when you were a kid? Maybe you're not old enough to remember when you were sick.
Yes.
And when you were a kid and you got sick and they brought you home from school. If you did it good, if you did it well enough, if you timed it right, you could catch a little bit of Price is Right. I'll tell you what though. You know what another great one would be? Like Hollywood Squares in the 70s. Because you're just sitting there in that box drinking your whatever, drinking a martini. Some
Probably
of those guys are smoking
cigarette.
Right, exactly. Smoking cigars. Makes me cough just talking about it. But I'll bet you that was a pretty darn good time, and it was prelude to a heck of a party when it was over. So I'll take either one of those. Carter, how about you?
Wheel of Fortune.
Carter would like to be on Wheel of Fortune. Probably because of Vanna White. But
I was going to say, I think someone's
nothing
got
wrong with that. Yeah, nothing wrong with that. All right, Tia.
Nothing at all.
Super Bowl weekend, big game weekend. What do you have planned?
I'm not going to lie, completely forgot it was this weekend. Usually I do get together with one of my high school buddies. They've got kids now, my kids' age. They usually have some kind of get together. Hadn't heard about it, but I'm sure they're doing it. We'll probably do that. But honestly, I'm just, being a young father, I'm just glad to have a weekend here and taking it easy, man. Although my boys love watching football, so we'll probably tune into the game. But other than that, just staying warm and getting ready for next week. I feel like next week and the next couple weeks are going to be pretty big with that WASDE report. I know I don't even want to bring up work, but there's a lot to consider here going into planting season.
I believe you're right.
How about you?
I believe you're right. I'm going to do pretty much the same thing. I'm getting fired up to watch some commercials. I saw a pretty funny Dunkin' Donut one with the Affleck brothers. I thought was hilarious, and so hopefully the commercials will be great. I'm not even sure who's playing. I think it's Taylor Swift versus some bananas from the East Coast, so I don't have any idea about any of that. But I'm sure it's going to be terrific. And
it will
if I'm forced to watch some football in between the commercials, I'm sure I won't hate that either.
For sure. Well, thank you for joining and listening to us today at the Zaner MarketCast. If you need more, just because you can't get enough of us, you can always follow us on Facebook and Twitter at the Zaner Ag Hedge and on LinkedIn at Zaner Group. If you have any questions you'd like answered on the air, shoot us a comment in the link section or leave us a comment or drop into that link to send us a note, and we'll get that answered for you right here on the air. Thank you again, and be sure to like, comment, and follow the podcast to not miss a beat. And we'll be back with you as price action develops. Take care, everyone.
Have a great weekend, everybody. See ya.